As part of its risk management framework, the IMF has processes in place to assess safeguards procedures at members' central banks. The safeguards policy was introduced in March 2000. It applies to members seeking financing from the IMF. Separate limited procedures apply for financing under the flexible credit line. The main objective of the safeguards policy is mitigation of the potential risk of misuse of IMF resources and misreporting of monetary data under an IMF-supported program. The policy complements the IMF's other safeguards when members receive financing from the fund, which include limits on access, conditionality, program design, post-program monitoring, and measures to address misreporting. When the IMF provides financing to a country, due diligence is carried out to obtain assurances that the country's central bank can adequately manage the IMF resources it will receive. For members of currency unions with no autonomous national central banks, a periodic assessment is conducted every 4 years, irrespective of the member country's financial arrangements with the fund. A safeguards assessment is a diagnostic review of a central bank's governance and control framework by IMF staff. Assessments aim to ensure that resources, including those provided by the IMF, are properly managed. Safeguards assessments evaluate the adequacy of 5 key areas of control and governance. These areas are external audit, legal structure, financial reporting, internal audit, and control mechanisms, denoted with the acronym ELRIC. The IMF uses international standards as benchmarks where relevant. It requires central banks to publish financial statements that have been independently audited in accordance with these standards. The main output of a safeguards assessment is a confidential report that establishes time-bound and prioritized recommendations to address key vulnerabilities in a central bank's safeguards framework. In addition, safeguards activities include monitoring members' progress in implementing these recommendations. While assessments focus on central banks, IMF arrangements that involve exceptional access with significant budget financing for governments may require a fiscal safeguards review. The broad aim of fiscal safeguards reviews is to provide some assurances on the controls on budget expenditures in cases where IMF resources are used to finance the budget. All members subject to safeguards assessments continue to be monitored under the safeguards policy for as long as they have credit outstanding to the IMF. The safeguards policy is subject to periodic reviews by the IMF's Executive Board. In the most recent review, concluded in October 2015, the board reaffirmed the importance of the safeguards policy in helping to mitigate the risks of misreporting and misuse of IMF resources, and in maintaining the IMF's reputation as a prudent lender. The board also approved streamlining measures for conducting assessments. Under the streamlining measures, update assessments will not be required for augmentations of existing arrangements, successor arrangements, or for central banks with a strong track record. The Executive Board noted that the safeguards process continued to help central banks improve their control, audit, and reporting practices.